Hey guys, welcome to the Investor's Guide of Memphis Real Estate. I am your host, Dean Harris, and as always, I'm with Douglas Skipworth. How are you, buddy?
Doing great, thanks.
We bring you guys this podcast to give you the boots on the ground knowledge to be a successful real estate investor here in Memphis, Tennessee. Please like and subscribe to the Investor's Guide of Memphis Real Estate on Spotify, YouTube, Facebook, wherever you listen to or watch your podcast. Show sponsors are listed at the bottom of the screen. We couldn't do this podcast. We couldn't run our personal rental business without all of these sponsors. Local Title, Griffin Clift, Everton, and Mashmeyer. We've got Corlin Financial, CrestCore Property Management, and I know I'm forgetting one, Triumph Construction. Those guys there are really a big help to us. So we're excited to have all of those guys on the show. So please like and subscribe to any of their channels and things as well. I help buyers every day, guys. Dean at CrestCore.com. If you need to buy or sell anything here in Memphis, please send me an email. All right, the last couple of weeks we've been doing something a little different. We've been starting to answer some questions that have been posted on social media or have been emailed into us. Last week we got one about, the funny one was about your sneakers. So we let you know that. Check it out last week to see what that was. But this week we had one comment about 38109, and I was talking about my absolutes with my where I do not buy. Yeah. And this person suggested west of 38109 either to invest in or to stay out of. I think they said to stay out of. Anything west of Highway 61 and 38109 is a no-no. There's no jobs or commerce. You get close to the river, and it's just not a whole lot happening over there. We feel the same way about west of Highway 51 and 38127, close to the river. It's just not a lot going on. So yes, if I don't recall what the emailer was asking about, if it was asking or suggesting, but either way, west of Highway 38109 and west of Highway 61 and 38109 is a no-no. We had another one last week. We talked about how much we were closing about 27. It's 28 now for July deals, and that 21, 22 of those now are loans. And we had someone email in and ask about what kind of loans, where are you obtaining these loans, and how does it look like? So one of the ways we're getting some conventional loans, which are just a straight loan from your local bank or mortgage company. Another thing that's really working, though, we mentioned this at the beginning of the show as our show sponsor, and we're going to talk about it again, but hard money loans are working. Oftentimes you can do 100% financing. In some cases, you can even borrow the rehab, right?
Yeah. Oh, yeah.
I think each house is dependent. But Corlin Financial, I think I've got 4 deals that we're working with them this month right now. So if you have any questions about hard money, I'm happy to put you in contact with them. But yes, conventional loans and hard money loans are working right now. And I do have a few DSCR loans, but that hard money is going. All right, today we're going to talk about 3 easy ways to scale your real estate business. This is going to be pretty simple. You're going to look at us probably at the end and say, maybe you knew some of this, but I think it's a good reminder for those that may be new or those that are looking to really get from that 2 to 3, 4, house range to over the 10 kind of count. One of the things I've always talked about is getting over that 9 and 10 house count or portfolio range. And the reason why I say that is I had this conversation earlier this week with a client. But if you have 2 to 3 rental houses and the water heater goes out,
it hurts.
It hurts, man. It stings. I mean, it's your whole profit for that month, maybe pushing into the next month, right? If an HVAC goes back, you might be working on the negative for 6 to 9 months. Yeah. Okay. You need to get your portfolio over the 10 house mark. If your average rent's 12 to 1,500, you need to get your portfolio count over 10. Then if a water heater goes out or something happens, it isn't nearly as damaging mentally. It isn't, costly financially, as you think it is. So, that's been on my, on my radar. It's been things that we've talked about. So 3 easy tips on how to scale. Obtain or use an LOC and explain how this works, right? Like a lot of people want to know.
LOC?
Line of credit.
Okay.
Line of credit can be obtained in many different ways. You use them. What's one way that you've used them before?
I've used them to buy houses.
Yeah,
but how I've obtained them.
Yeah.
The two ways I'll tell you that have been great. I feel like they're most accessible potentially. Bought my personal residence, turn of the century, for $215,000. Put a little down payment on it, and started paying down on the mortgage. It appreciated a little bit. So the equity was through appreciation, the initial pay down, the initial down payment, as well as principal pay down. And so I went to the bank and ended up, the banks were a little more generous back before the Great Recession, and so they would give you a little more on your home equity. But they gave me $100,000. I ended up with $100,000 equity because it had appreciated, paid it down in the down payment, and ended up with a $100,000 line of credit.
Okay.
So then I was able to use that to buy my first rental house. I didn't have cash saved up. I just found a house, got it under contract for $45,000.
Okay.
And wrote a check on my line of credit.
Okay.
Just borrowed it.
That's what I want you to do is go through those details.
Yeah, I borrowed it from my line of credit, 45. I wrote it. It needed $5,000. Borrowed $5,000 on my line of credit, so I had $50,000 in it.
Yep.
And then I got a renter in there for like $700 a month.
Good numbers.
And then I took it back to that bank and said, I've got $50,000 on this line of credit, but I've got a rental house that I own free and clear because I've paid cash for it.
Yep.
This borrowed money that's on my personal residence.
Yep.
And they said, oh, well, we'll pay you $50,000 mortgage on a 20-year amortization at 8.5% interest rate back then. So pretty comparable. And then I just paid off my line of credit, and it was back to $100,000 in the line of credit.
Now, the reason why the bank was willing to give you the $50,000 to refinance that is because it was worth probably
70 something, 75 something.
There
like
you
that.
go. So you had the equity and you had the 20% that was built into it. The bank was willing to do that. You paid off your line of credit on your home.
Yep.
And did you spend any of your own cash or any of your own money?
Not then.
There we go. There's to me, the number one way to scale is that. Right. It's how I did it. It's how you've done it.
Oh, yeah.
And then the next biggest question, I already can hear the people listening now. They're just burning. Well, how do you get that? You know what? You just explained it. There's one way. Okay.
I'll tell you the second way I got it.
Let's do it.
The second way I got it was a stock or marketable securities. It was bonds and stocks portfolio that had a value of, call it X.
Okay.
I don't know what it was, because it was a family member's portfolio. It wasn't my portfolio. I'd been doing this a little while, and they had a stock portfolio that they owned. And let's say it was worth, $250,000. And so then I went to them and said, hey, you know me, you know what I'm doing. I'm trying to scale my business. We support you. Then they were able to go and get a line of credit on that portfolio for a quarter of what the value of that was.
Right.
And then allow me to use that line of credit to then go and do the same thing that I was doing with my personal residence, but my personal residence was only limited to 100, where you could borrow off of somebody else. Again, not everybody has somebody in their life who's got a $100,000 plus stock portfolio, but guess what? Some of you do.
Yeah, some of you do, and some of you own a home. And
or you own a home, or you own your own 401k, or you own your other something that you could borrow against. That's free and clear.
I've got a list 1.5 miles long of California clients. I know that some of you guys have got equity in your houses out there. So this is a way that you can obtain that line of credit. Going into your bank that you work with, this is one way that can work, just depending on the individual bank. But wherever you're located at, wherever you bank with your main bank, where your daily checking account and a lot of your savings maybe is there, go into the bank and just talk to them about what you're trying to do. I had a client here. He went to his local bank. It was here, but he banked there, and he said, "Hey, I'm going to put $50,000 in buy a CD," and they gave him a line of credit for $200,000. So see, there's another one.
So I was just about to say that as well. There are some banks, depending on your credit, depending on your relationship, which you just described that situation is, they'll give you an unsecured line of credit, which it just sounds like what they did for that person. 150,000 of it is unsecured.
Is unsecured.
So basically, they could say, "We'll give you a 200 if you put a 50." Or it's like, but maybe they'll give you $100,000 line of credit unsecured, then you can do that. It's just like a credit card.
And by the way, start with whatever. Start with 50. If they give you 50, use 50.
Yes.
Right? Use the 50 and keep turning it over. Because I didn't, with my line of credit now, I didn't start with my line of credit now. I started literally with $150,000 from the bank. That was it. Yeah. I had to turn it over. And they didn't want to give me the 50. They wanted to give me 100. But I was like, with the price ranges, I can't do it this whole project. So they gave me the 150. And then it took me, 8, 9, 10 times of turning that money over for them. And we grew it.
And I mean, another way, I know we're just talking about this, but giving people ideas is, if for whatever reason, if you have $100,000 and you want to buy your first house free and clear, then you can go get a line of credit on that house so that so it's paying free and clear and it's paying in money. And then you go buy another house using the line of credit off of this free and clear rental.
So if you
then buy another that then you put a mortgage on.
So it originally starts with some cash, but you're right. If you want to go buy a home in cash, it's the same thing as if you have the equity in your personal home.
Correct.
You've now got a rental home that you paid $150,000 for. They're going to loan you $120,000, so you can go take that $120,000 and go buy you another one. Yes. You can continue to leverage and continue to go. So there's many ways that you can obtain a line of credit or some cash. You have to be creative and you have to be aggressive. Yeah. A line of credit, you're not going to be sitting at home on your computer typing, I want to borrow money, and then all of a sudden a line of credit shows up in your email box, right? You're going to have to be creative and go after it and be a little bit more aggressive. Okay. Hard money. We talked about this at the very beginning with our question from our listeners. So you can use hard money. Hard money over the years has, evolved into a business, right?
Right.
Hard money used to just be your uncle who wanted to loan it to you, or some, loan shark who wanted to loan you the money. You never knew if your day to pay it back was going to be in 30 days or 3 days. And, it was always scary to, to pay the man back.
That's right.
Hard money now has evolved to where, there are businesses set up for this. They run it similar to a mortgage company.
Yep.
Corelin Financial is one that we lean on, one of our sister companies, show sponsor, but I've got deals working with them right now. So hard money, I'm going to let you get into this a little bit further because I know you know it really well, but it is a tool that I have used. It is, what's the negative and what's the positive? The negative you might say it's expensive money. The positive is that it's easy money.
It's easy.
Okay. So I have been willing to, exchange those easy money for expensive money many times. I bet I've used Corelin Financial 20 times over the years for flips and short-term holds and till I could get out of them. So talk about Corelin, talk about hard money a little bit and how you can obtain those loans and why maybe, in your opinion, that it's a useful tool.
Yeah, it's useful because it's easy. Like you said, you can potentially get 100% of the purchase, 100% of the rehab. And if it has any kind of fees or closing costs with it, you can potentially get all that. So you can literally be in a property for no money down. Mm-hmm. Mm-hmm. So that's the beauty. That is the beauty, because a bank's not going to do that.
Never
going to do that. And you can do it pretty quickly.
Yeah.
So
what's the fastest? If I came to Corelin today at 2:00 with a steal of a deal and I said, I have to close this, and
realistically, it could be a week. I've seen it. I've said this before. I've seen it. The fastest I've seen it is about 6 hours. But they had to pay extra for that because we had to get the committee together and do that and fund it. But it can happen that fast. But realistically, you got a title search, you got a contract. It's going to take you a week or two, but it can happen as fast as you need it to happen.
That's what I love about it, and it gives you some flexibility. I borrowed it one time for a huge multifamily flip that we did a couple years ago, and I paid Corelin a lot of money. But you know what? We made a lot of money. It's like it was a tool. It was somebody that helped me get to the next step.
Yeah.
So,
and the bank wasn't going to do that for you, and you couldn't put that much cash into the deal.
No. It wasn't something I had the cash to put
Or
into.
guess what? You could have gone and found a financial partner.
It would have cost me
more.
Just as much or more.
It would have cost you more.
Probably a percent. It would have gone into the profit. So
that's right.
Without paying just a percentage rate. Yeah.
For the right deal, for the right time, it makes sense. For fix and flips or bridge loans.
Yeah.
Where your bridge loan just being like, hey, I'm going to buy this, I'm going to fix it up, and then I'm going to go refinance it with somebody else for the long term.
Right.
So if you're doing a BRRRR, or if you're doing some kind of strategy, even if you need to hold it for a minute before you need to then go refinance it somewhere else.
So if you're the guy or gal that's out there right now and you've got 2 to 4 properties and you're thinking to yourself, hey, I just had a water heater go out and I'm frustrated. You got 2 decisions. That's going to continue to happen. Call me and let's sell them, get out of it.
Yep.
Or use some of these tools that we've talked about today to scale up into that 9, 10, 11, 12 house range to where you're not worried about these things. Well, Dean, I don't have the money. We just told you. I just gave you some ways right here that you can use lines of credit. You can use other people's money, hard money, to try to obtain more properties. My first 12 or 13, I used private or hard money.
Okay. Great. Awesome.
And those rates weren't cheap.
Yeah.
Even from the private money, it wasn't cheap.
No.
I mean, that person didn't want to loan me that money for nothing.
Yeah.
So it's like, I used private money or hard money for the first 12 or 13 properties. I kept them alive. I went to the bank and I said, hey, I've got a business running. I want to buy more. Yeah. Can you refi these and take me off? And they did. Yeah. And they took them off. So I obtained my first 3 or 4, I know for sure, with hard money.
Yeah.
At a 10 and 11% interest rate. Yeah. But I found the deals that worked. I made that work for a short period of time. Went to my banks, because then if you go to the bank, this is another thing, and then we'll end this. Like you go into because my last one was, you go to your bank and explain. So, you come into Coeur d'Alene and you use the hard money to buy 2 or 3 houses, right? Okay. It's expensive money. You go into the business. Then you go to your bank, and it's like they don't have to know necessarily that you made a bad deal or you made a deal that was more expensive, or what. They just know you own those houses.
Yeah.
I'm a 3-house investor. I'm a 4-house investor. You don't have to talk about about where, how, or whatever. Then you can go in there as a professional and present yourself as an investor. I want to refi these, and then come in there with the plan. Maybe they issue you a line of credit based on the 4 that you've got, right? Mm-hmm. Maybe they talk to you. So I want the message to be out there a little bit today. It's like, these are 3 easy tips, right? But don't let these tips and these pieces of advice from us overshadow or overcloud the importance of you going in there and making a personal impression on the banker you're trying to work with.
Yeah.
They want to know you know what you're doing. Yeah. You go and obtain. If you don't have any money right now and you're saying I can't do this, then you didn't listen. You need to come and get some hard money loans. You need to get into buying some good rental properties in the area. Go talk to your bank about a line of credit. Go use your line of credit here, and then we can start to scale. I mean, and if you're with 3 or 4 properties right now and you used all your cash and, oh my God, I don't have any more cash, I can't get any more. Yes, you can. We just talked about it. Likely have some equity in the ones that you have. We've got hard money here that you can get approved for this afternoon. So I'm encouraging you. Yeah. Expand that or your horizons. Think a little bit harder. Think a little bit wider, and maybe try to use some of these tips today to help you scale.
Yeah, and then get in the bank's great, because the bank's gonna get there where you're gonna have to go into officers' guidance lines and the opportunities to get essentially a line of credit with the bank. But we'll save that for next time.
Got it. Anything else?
No, that's great.
Guys, appreciate you listening in. We'll be back with you next week. And please send in your questions.
Yeah,
anything on social media, comment on there. Let me know if you got any questions. I'm happy to answer. See you guys next time.